G'day listeners, Sammy Gordon here from Australian Property Scout. If you're loving all the property investment content over here at SBI, you will love the Scouting Australia podcast. Hosted by myself alongside my good mate and experienced investor Jimmy Ibrahim, we unpack everything from real investor stories, mindset hacks, and a massive amount of property investment strategies and much, much more. Check us out over at the Scouting Australia podcast and take your investing to a new level.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good day, how you going? Phil Tarrant, host of the Smart Property Investment Show. I hope you're well. Getting by in property investment. I've had some really good interactions recently with some economists and other people that operate in and around property, trying to make some sense of it all. Particularly this sort of dichotomy between housing affordability and the need for increasing supply of properties in Australia to alleviate what is a struggle for many Australians to get into property, noting that a third of all Australians rent, and the fact that vacancy rates are at an all-time low. So it's very complicated at the moment. There's a lot of people doing it hard and struggling out there. But this is a podcast for property investors. It's a podcast around property investment. So it's about looking at these dynamics to understand and interpret what's going on and how you can make more informed decisions when it comes to investing. We launched the Fast 50 recently. I hope you've gone and checked it out and downloaded it to see where we've come up with those areas which should be providing a good propensity for capital growth over the coming period of time, how to go about assessing the right place to invest and how you go about doing it. And one of the things I do on this podcast quite frequently these days is chat with those people that support Australians invest in property strategists. It's the booming part of the property industry. I think a lot of real estate agents these days stop being real estate agents and chasing sales and work out there. They're much better working on the other side of the transaction. That's actually helping people buy property. And I'm talking buyers agents and property strategists there, property advisors. Still unregulated. I know there's a lot of work going underway right now. We have bodies like PIPA who are trying to shape a charter for best practice in and around property advice and the advice sector. There's a lot of groundswell around how it will be regulated at some point in time. But there's some very good operators out there that do the right thing, helping Australians invest in property, particularly those who don't have the time, energy and effort to do it or bandwidth, or they don't have the skills or expertise. I still don't yet know what the numbers are of Australians that use buyers agents or property strategists to secure property, but it is growing. And you only need to know it's growing by the number of different organisations which are emerging in and around this particular cohort. One of them is Investor Partner Group. I've been aware of this business for a little while. I haven't spoken to anyone from it. It's an integrated organisation that works in and around property investment, so buyers agency, property management, tax and SMSF and other compliance orientated stuff, and also education moving forward. The founder and the CEO is Moxin Reza. He joins me in the studio. I'm going to sort of see what these guys are up to and how they see the world. Moxin, how you going? You well?
I am great. Thank you for having me on the show, Phil.
Mate, it's great to see that. And it looks like you got a fancy, we're obviously over the Zoom here, like a hybrid little podcast studio there. How's that go? You do a bit of podcasting, do you?
I do, yes. I have a podcast called Help Me Buy Property Podcast. And yeah, it's more for people who are a lot more into property. We're talking about experienced investors, talking about various different strategies to navigate through. So yeah. And of course, property development, which is our core business as well. So yeah, we do have a lot of fun there.
Yeah, well, I do a fair bit of podcasting, and one thing that you're guaranteed is that now there's a lot of property podcasts out there, and I think it's some sense to just how much of a national pastime property and property investment is for those. Yes. I think 1 in 8 Australians now claim some sort of property-related transactions inside of their tax returns. So these are the Australians who are providing a third of the rental accommodations that Australians invest in. And, to those earlier remarks I made, I don't know what your views are, Moxin, that it's pretty tight out there at the moment. And, property still remains a very strong asset class because of a lot of these market dynamics.
Look, typically Australians have a massive love for property, and that love for property is never going to disappear. This Australian dream of, or this need for, I need to buy my first home to live in is almost for granted right now in Australia, but from the economies that I come from, backing into, Pakistan or India or, countries like Hong Kong, Singapore, or even UK to some extent, this dream of owning a property for yourself is not a reality anymore, right? Becoming so far and far-fetched that you can't be a first-home buyer anymore. And that's where I'm seeing Australia leading towards, with this price disparity, mortgage affordability, all of those things. And so I truly believe that the era that we live in, over the next sort of 20 years is typically an era of opportunity for a lot of people who wants to build scale into their property investment journey and provide the baton for generational wealth to people coming behind them, because this disparity would grow to such an extent, like it happened to Hong Kong or Singapore or in some of the Asian countries, that that dream would be no more. Either it would rent and rent forever, or you would keep scaling up your property portfolio. So yeah,
it's a real tough one, Moxin, because a lot of Australia in general has quite a difficult relationship with the idea that the way it has been up until the point where we are today to where and how it's going to be into the future are probably going to be two very different things. And that is the expectations that all Australians at some point in time will have the right to own their own home. You look at some of these other areas that you have spoken about where that's not the norm. So Australians need to have a bit of a mindset shift in that the advancement of Australia and its place in the world and all the very important aspects which are helping to drive and champion the growth of Australia as a nation, as a place to live, but also as an economy, means that that's not going to be available to everyone. And this is a podcast for property investors and property investments. So we have a very favourable audience. However, there will be certain cohorts and segments of the Australian population who would be outraged with that statement that it's not an obligation now that all Australians should be able to own their own home.
Yes, it's very controversial, right? But there is a lot of truth behind this. So when I say to people that, they need to increase their risk appetite when they're thinking about property investing, I think that's true to some extent because, while the savings levels are dropping, quite actively because of, all the mortgage stress and the interest rate rise and the inflation, you can see that, 1 out of 10 Australians right now is doing budgets. And that's a really hard number to basically, understand for a lot of people because...
So it's 1 in 10 is your
1 in
number.
10, yeah.
They actually have a budget.
Yeah, or thinking about putting a budget in place. And so,
Really?
that is, yeah, which is quite extraordinary, right? Because, you think about Australia as an economy and you wouldn't think that, people would really be doing budgeting. But a lot of people are thinking about doing budget purely from an investment perspective and savings perspective so that they can, either afford buying their own property or being educated into going into property investment, ultimately catching more wealth, right? The idea is ultimately to make more wealth, whether you do it through your own property or through rent vesting, right? So, yeah.
Yeah, and at some point in time, families need to start investing in property, and there's a lot of first-generation investors out there who will be, passing, or there'll be the carriage of wealth to other generations moving forward. So you always got to have property investment available to all Australians. The way in which they become a property investor means that more might inherit it rather than start it, but there's always going to be the ability for people to start investing in property, and whether it's today versus what it was 20 or 30 or 40 years ago, all the same stories exist, as Definitely. There will be sort of 40 years into the future of people saying it's impossible to invest in property, which are people are saying right now, but there will be people doing it. And that's just
100%,
fact and reality around it.
100%. And I think one of the biggest thing is, banks play and the credit availability plays a big part in a lot of these things, right? What is the bank lending going to look like? How is that going to reform? How is that going to change, right? You take yourself back, 30 years ago, and there were not 25-year loan terms or 30-year loan terms, right? So the bank needs to give money. And so how do they innovate in this space would be interesting space to watch as well. Keeping that dream alive for as long as possible, right?
And what sort of people are attracted to Investor Partner Group through your services? Are they sort of ambitious millennials looking to invest in property?
Look, we see a whole different cohort of people. We have our own Facebook community as well, Property Investment Australia, which has grown to about 10,000 people over the last 3 years. And I'm super humbled with, the interactions that I get. But a lot of people that come to us typically come in because they look for that assistance up front to, form a strategy in place, have a bit of a plan in place so that they know what to buy, how to buy, where to buy, how to reach their passive income targets, how to reach that financial independent goals, and how to structure themselves properly, right? So you would hear this, people say all the time that, I bought 2 properties and the bank is not giving me or lending me any more money. There are typical leading indicators that are behind this, right? And so how do you make sure and how do you bypass that? And how do you structure yourself in such a way that you can build a scalable and a sustainable property portfolio at the same time? And that's where the biggest cohort is. We don't deal, which is quite such a shame, we don't deal with a lot of first home buyers typically. But, I think there is a lot more education that needs to go into that space as well, because a lot of people force themselves to acquiring that they can't afford. But if they went into the investing route, they could potentially afford the debt. So, yeah.
What would be the one sort of similarity or common identifier of most property investors that you work with? Is there anything that is sort of consistent with everyone?
Look, I always see that people are very reactive. When you think about, property investors, they always put a blind eye to what I call it as a serviceability trap. Typically, majority of the times, I see people, they only have like $300,000-$400,000 left in their servicing or borrowing, and they're taking one last attempt on going out and buying one property because that notion of I have 5 properties or 10 properties means a lot. It's not about the quality of the asset, and so you see people coming in all the time where either they are trying to maximize their borrowing by over investing or without having a strategy in place, or they basically kill themselves towards working, right? And to create more income for themselves so that, they can keep borrowing. And so this notion of, I'm going to buy negatively geared properties for as long as possible and hold it till I'm going to retire and create wealth for myself, that's a really old school mentality. Now it's all about sustainability and how do you sustain your property portfolio going forward. And so especially with interest rate rises, you see a lot of people in that sort of similar boat where, their serviceability has dropped, the interest rates have risen, they've never thought about, landing up into 8-9% interest rates. So how do they navigate through some of these things?
The key critical factor of property investors is being able to hold on your property. So the best investors are being reactive to a rising market and being proactive in terms of shaping their portfolio. So it is sustainable, negative
100%.
geared or negative cash flow properties is a consequence of borrowing and purchasing.
100%.
If you ask most property investors, they would rather be positive in their portfolio and own it outright, and pay tax on it. It's one of the biggest questions I have is that when you see a lot of the sentiments from governments or certain sectors of the media talking about negative gearing and the tax benefits that property investors get, no one talks about the contributions of positively geared property to the Australian tax coffers. That's forgotten about, and from what I understand, it's a lot larger than the benefits that Australian investors are getting. So that's not a discussion for today. But you obviously have a passion for property, Moxin. I want to have a discussion around that. We'll just go to a quick break. Stay with us, everyone. Back in a moment.
Are you looking to invest for a big return, but are unsure which suburb is up and coming and guaranteed to give you the most bang for your buck? Smart Property Investment and Pure Property Investment have unveiled the Fast 50 report for 2025, identifying the suburbs backed by research that are giving investors the highest returns. Don't make any investing decisions until you read the free report. Visit smartpropertyinvestment.com.au to download the report.
Welcome back, Phil Tarrant from Smart Property Investment with Moxin Reza. Now, Moxin, you help people buy property and sort of invest in property. Are you a property investor yourself?
I am, yeah. Look, I started my property investment journey when I was 21, so very earlier in the piece. I'm proud to say that I've made every mistake that a property investor would have ever made. And, I say this out loud because I have the courage to admit that while I was making those mistakes, I was also treating it as a business. And I fixed those mistakes quite quickly because I realized that those was mistakes. A lot of investors don't do that. They buy and sit on it and fingers crossed, wait for their property to, turn around, without looking at the leading indicators. So yeah, that journey has been amazing over the last, I'm 37 now. So over the last almost, 2 decades. So yeah.
Wow. That's a long time. And can you give me a sense of sort of your portfolio? Is there sort of what sort of assets are inside of it?
Yeah, so my property portfolio is what I call it is heavily geared towards property developments and cash flow. And I have this methodology of building a sustainable property portfolio where I have a transition of, going from first time investing to high net worth investing, and how do you, scale up your property portfolio slowly and gradually. So typically from my property portfolio's perspective, I'm heavily geared towards property developments. And in order to do those developments, I need cash flow to basically support them. Right now, I have 3 developments on the go. There is an 8-unit site in Melbourne, which is on a 4,000 square meter lot. There is a 5-unit in Adelaide, and then there is another 3-unit in Adelaide. So that's where the property development property portfolio is. Then there is buy and hold typically, which is all property development sites basically that become my pipeline for me to roll over as the projects basically sell. And then I have cash flow properties. So, a bit of commercial, a bit of co-living, roaming houses, which are becoming quite a new thing in the market. But, I always say to people, that's nothing new. So I have a couple of those that provide handsome amount of cash flow to my property portfolio, keeping it quite balanced.
Can you make money developing property at the moment? If you read the media, they'll tell you that there's no money in development.
Well, I've done over 40 projects over the last 10 years. The 3 projects that I'm doing, the first one is clearing about 2.5 mil. The second one is clearing about, I would say, 600,000, and the third one is in the similar realms as well. So yeah, if you understand the numbers and do the feasibilities right, then of course, there is money in the deals, right? You buy low, sell high, you build wholesale, sell retail. Basically, that's the whole idea of property development, right? A lot of people enter into property development space anticipating that the market is going to grow and they're going to make money. And I call that, a pure gamble. It's nothing different from, buying a property and sitting on it and waiting for that property to grow in value, right? So ultimately, as a developer, your notion is that if I can develop now, if the council allows me to develop now and the builder builds it today and the real estate agent sells it today, do I make the money today? And if the answer is yes, then of course you'll always make money in your development projects.
Yeah, you'd like to think so, unless sort of seismic stuff happens and changes everything. But, you see through the COVID pandemic from, 4 years ago pretty much to where we are today when the lockdown started, everyone was talking about a 40% drop in property prices. We saw a very different story sort of play out. So how do you find the time to do property development when you have a full-time job? It's essentially 2 full-time jobs because to develop properly, you've got to be pretty organised.
Yes. Look, I am not a one-man show. There is a big team that sits behind this. We have project managers that are in the business that basically supports the business as well. And so Investor Partner Group has various different arms to the business. Buying agency or buyer's agency is one part of the business. Property development is another part. Then we have tax, SMSF, business structures, advisory. And then we have typically cash flow real estate, which is the co-living side of the business, and we are launching Australian Property Academy, which is at the back end of my book coming out, The Millennials Guide of Property Investing. So a lot of these is basically synergetic. It comes down to the ecosystem. One of the biggest pain points that I always had when I used to invest is, your buyer's agent is on a different page, your accountant is on a different page, your mortgage broker is on a different page, and no one understands. And so your property portfolio typically is like a Jenga puzzle. You're taking out these wood blocks, hoping that they don't collapse, and so a lot of people build their property portfolios even today like that. So it's important to have a structure in place and an ecosystem that basically looks after all your needs. And basically that was the whole idea of, building this Help Me Buy brand.
Is there a bit that you like more than others in what you do there at Investor Partner Group?
Look, my 3 passions in life, I always say, there needs to be a bigger why than property in itself. My 3 biggest why is basically property, data, and teaching. And I've brought these 3 together by doing what I'm doing, through the business. So my inclination sits a lot more closer to the strategies. And so when we are discussing strategies with the clients, going into a lot more detail, that's where there is one-on-one interactions with a lot of people. So that's where I play really well. Of course, data always sits very close to the heart because I'm a data scientist and a data nerd. But then property development takes a lot more focus as well because ultimately it's a numbers game.
So what were you doing before you set this business up?
Look, property was always a selfish passion. It was always happening on the side. From my perspective, I started my journey as a data analyst, a long time ago. I've worked in corporate for a very long time. I used to work for Department of Treasury doing state budgets. So quite high profile jobs, very ambitious, wanted to be the CFO, the CEO of the company, climbing the corporate ladder. I think the pivotal movement for me was when I did my MBA back in 2012 through Melbourne Business School. And that's where I realized that, I don't want to make money for other people. I have, what it takes, a business basically staring right in the eye. And that's where Investor Partner Group, or Help Me Develop, basically started. So we were not, typically buyers agents at the start of the journey. Our core business still remains property development. And that's where we originally started from.
Yeah. And the question is how much of property development or being a successful property investor is the data and how much is it the art, right? And this is the interconnection of it all. Data only get you so far.
100%.
As the execution of it is key. Did you still absorb yourself in spreadsheets?
I always say data and science, it's a massive symphony of data and science when you talk about property, right? So data can always take you to a certain extent, but the art needs to come in. You need to have that eye for the detail. If you talk about property development, say, for example, identifying the property product market fit typically cannot be, through data. You can't identify a product market fit. What is people going to love, and what is the product that you're going to bring out there? And so there is a lot of qualification questions, or, there is quality and quantity. So I totally agree. Look, art, as a property investor, it's also about the look and the feel and the ground presence as well. And that's why when we were setting up our business, we wanted a local presence in pretty much every state that we were operating in. So we have, people basically that resides into different states, so that, while the data might present us to go somewhere, the locality might become completely different. There's always good and bad sides to suburbs, and, the ghetto and the non-ghetto sides to every suburb, right? And the data doesn't tell you that typically. Yes, to a certain extent, people would argue, right? The crime rates and, the housing commissions might give you a bit of an indication, but, not to that extent where, you can safely say that, okay, this part of the pocket is the safest part of the area, right? So, yeah.
What's a typical day look like for you? Is it mainly working on developments or mainly working on business?
I think both, I would say. So we have 2 project managers on the property development side of the business. Our appetite on property development is not massive. We only do 10 projects every 2 years. Right now, we are only scaling that up to about 15 projects. The scale of those projects could be different. And we do projects ourselves, and we also do projects for the clients. So, there is a good balance between the two. The start of the week is always about the teams. And so, I'm having a discussion with the teams, making sure that everything is, happening, and, making sure that the business is on the right track and it's growing. And then the later half of the week, which is like Thursday, Friday, usually is more client focused. So, I like to be on the ground talking to the clients, making sure that everything is happening great, and, customer experience is basically managed as well. Sundays are the strategy days for us. And so all the directors would basically come in from various different parts of Australia, and we'll discuss and decide as to, okay, what happened in hindsight, how's the week going to look like typically. And then, we have this thing within our business where we would catch up every 6 months in an Airbnb. We would lock ourselves in for 3 or 4 days and basically go into a lot more detail about, okay, what's happening with the business? Are we going in the right direction? Are we helping the right people? Ultimately, that's the key, that's the goal.
Yeah, so it sounds like you guys are pretty focused. I've got some more questions around now. I'm just going to get another break. Everyone stay with us back in a moment. Welcome back, Phil Tarrant. I'm having a chat with Moxin Reza over at Investor Partner Group. Now, Moxin, you said your sort of core, the nucleus of the business around property development, and, I sort of asked the question around whether or not development was feasible at this point in time, considering sort of labour shortages, increased costs in labour, and also materials, which seems to be normalising a little bit. But, Australia's still struggling with the idea that it needs to develop a lot more properties and create more properties, which is good if you're in the business of property development. But you see, you don't take on too much, and you can only sort of run so many projects simultaneously to be effective at it. I'm sort of quite curious around serviceability when it comes to your own personal developments and those of your customers. Is it hard to get finance around this stuff these days?
Look, I mean, it's an interesting question, right? When you talk about servicing and the serviceability, when you talk about servicing for construction or property development, there is this stereotype that, you need a lot of servicing to service these development projects. Banks do not want servicing when they're assessing a development property. Typically what they're doing is they're assessing the property on its own merits as profit. Are you delivering enough margin on cost basically for them to give you money? I would say there is also access to mezzanine finance and development funds where you can tap into. Lastly, what I strongly believe though is properties with development potentials, which are bought in the right areas, with the right due diligence in place, they actively grow a lot more than, normal properties anyway. Now, coming back to your original question, we talk about servicing, right? You need to have a strategy in place. You can't just, walk off from the street and, become a property developer. A lot of people make that mistake and fail miserably. You need to
most fail, by the way.
Yeah, 100%. I would say, I think that number is like 90% or something, in relation to property development. And the reason is that, it's very chic and it's very cool to call yourself a property developer. It's a really great barbecue conversation, right? But understand that, property development in itself is not fun. There's a lot more red than green. When you talk about property development, you don't see cash flow coming in. You would push in money into a project and you hope that, you would get the money at the very end. So there's a lot more red and there is only 2 lines of green typically, right? If you look at the balance sheet or profit and loss. And so you need to sort out your cash flows first. If you haven't sorted out your cash flows first and you go into property development, for any chance you have, if there are delays in the project or the project takes longer or you have to hold the residual stock, that cash flow is going to be the key in managing your property portfolio in itself. And so there's a very careful transition from what I call it is buy and hold to buy and develop. And that transition of building a business of property needs to be taken carefully. It can't be just because you have 4 properties, you can start doing developments.
Yeah, I always caution people around property development. People always say to me, why don't you do more development, Phil? And I go, well, if that was my job and that's all I did, I'm sure I'd be very good at it. But it's not my job and that's not all I do. And I don't have the time and the bandwidth to do it properly. So I choose not to develop.
Yes.
And that's a mature approach. Or maybe at some point in time, I'll start developing property when I have the time, energy, bandwidth, and capability to do it effectively. You can't. Property investing, if you get the basic fundamentals of it right, it can be quite forgiving.
Yes.
Property development is a tough mistress and it's fraught with danger and it's not forgiving at all. It can come up and it can bite you and it can bite you hard. So you need to do it properly with the right sort of strategy, but also the right support around it. It sounds as though that's where you do a lot of your work is supporting clients around property development.
The important thing also is that, even with the basics of, investing a property and buying it from a hold perspective, if you add that one extra layer of, okay, can this property add any extra value? This is not a high best use of the property, right? That would take you, very far from a growth perspective in its own. You hear those stories where you got a knock from the developer saying, hey, I know your property, average property sells at $1 million and I'll give you 1.5. That's because there is an added value in that property, right? So, I always caution people that, when you're even doing investing in for buy and hold perspective, always have that lens as to what is your exit strategy with this property. And yes, sell is one exit strategy, but can you retain the house at the front and build one at the back? Can you drop the house and build 3? Could a high rise come here? Could you pair it with a neighbor and build 6 duplexes? There's a lot of strategies available to a lot of people. You don't need to do it 100%. You might not have the risk appetite, but having that exit strategy available to you would basically mean that your property is a lot more scalable and sustainable from a growth perspective as well.
Did you get on a pathway of sort of property options, getting options on people's properties to try and develop from, or do you sort of normally purchase for the purpose of development in the future? It's a tactical level discussion, but it's an important one.
Look, I think we can have a complete separate episode on this, right? Talking about basically this, but you can have a real estate contracts that are written up in such a way that, there are still option contracts, with due diligence clauses in place, protecting yourself to give you a clean exit. So there's various ways when you think about, property development, but, you try and do both, right? I don't see that, you have to do one or the other. A lot of people are quite sort of focused on only options only. But I always say that, when you're going down the path of options, you are trying to convince an unmotivated vendor who's only motivated by the money, right? So you would have to keep offering them money. Whereas if you have a motivated vendor to sell, then, every condition is on the table. So it totally depends on, what does your residual land value looks like when you're going into this property development space.
And what about sort of capitalizing debt repayments into loans over time rather than sort of servicing it? What's your views on that?
Look, serviceability in itself, there's a lot of stigma around this, right? So if you think about servicing, and I'm going to take a step back to, just break it out for the viewers and the listeners, a lot of the people, when they think about servicing and the serviceability trap and the bank is basically saying no to you, there's ways to basically improve your servicing. And of course, having a development property in your property portfolio provides you that exit strategy in its own where, you don't have to just sell it to come out. You can subdivide and sell the front and keep the back, or sell the back and keep the front, improving the yields. But also ensuring that, having a sustainable property portfolio, even with you capitalizing the interest, provides you that, backstop in making sure that, you're not taking excessive risks. You have a perfect strategy in place where, if the temperature goes too high, you have the backstop again to, look at, the cash flow side of things. A lot of the people who get into property development space typically have a lot of businesses, or even to that extent, when you hear about people having 10, 20, 30 properties, they have cash flows and they have businesses running, and that's why the servicing keeps coming through, right? And so it's important to understand from a novice investor's perspective that, every time you're going to go to the bank and build up that capacity for yourself, ensure that you have the right structures in place, ensure that, you have a development property in your profile, have a side hustle, an ABN or something along those lines where, you can get access to, low doc loans typically, merging debt, closing debt is another one. And, last but not the least, access to second tier and third tier lenders. So there's a lot of levers or tools available to you when you're thinking about wider dynamics of, how do you manage your servicing typically.
Yes, lots of questions there, and we could probably chat all day about all of them, Moxin. But you mentioned you got a new book coming out. Was it Millennial's Guide to Property?
Yes.
Property investing? Is it more development, or is it more sort of buy and hold type stuff, or is it everything?
It's basically, I mean, if I talk about a few things in relation to the book in itself is about showing my pathway about, what mistakes have I made and how have I come out of it. It also talks to the basics of, how to find the right investment grade property. What are the key things? What are the key due diligence? How do you build a scalable and a sustainable property portfolios? How do you basically go around structuring yourself properly so that the banks could never say no to you? It also goes into a lot more detail about, what partners to use. How do you, scale up your property portfolio in its own from a first-time investor to an experienced investor? And how do you use yield growth and manufacture return to your advantage? And how do you find that balance between the three? Because ultimately, when you talk about property investing, it's a game of the three, right? It's the yield and the growth and the manufacture returns. And so what do you need to chase at what time in order to scale up your property portfolio?
And you sort of spoken about you've probably made all the mistakes you can make in property investment. What would be the sort of the 2 or 3 biggest mistakes you've made?
Look, I think everyone makes that mistake of buying a house and land package, realizing that, it was a dud, buying an apartment, realizing that you should have never done it, buying an off the plan property, realizing that, it doesn't work. And so, some of these basic mistakes are something that you are never proud of. But one of the key things that, touch wood, that I realized that I managed to bypass, and that's the journey of about me getting into the property development space was, I didn't had like an itch to do property development. I basically fall into it, and I realized, well, this is a great strategy if done properly. And I still remember this first property that I acquired going back to 2013 in Reservoir in Melbourne, where, one of the person told me, hey, you can save the house at the front and build something in the back. I was like, oh, okay. I didn't buy this house because of that, but that's very interesting. But I don't have the money to develop it because, I don't have any lending. This was the last bit of lending that I had. And I ended up basically working through it. And look, I didn't do any due diligence at that time at all. My idea simply was that, okay, let's explore and see, because I have this extra $40,000 worth of money sitting there that I can't do much with. I can't go out and buy another property. And so what do I do with this? And so I use that money to basically run the DA, cut the house at the front. I think from memory, I bought that house for like $680 at that time. I sold the front for $600 with the land where I could put 2 townhouses at the back for $80,000. And I sold each one of them at $700. And, while that was a complete fluke, I realized that, if you do it structurally right, and if you do it properly, then of course, this strategy would definitely work for a lot of people. And it's a very low risk strategy again as well. So while I would say that, a lot of developers typically make that mistake of, they think about buying something and, couldn't deliver or wouldn't go in the right direction. One lesson that I learned for myself was, having a proper feasibility in place, doing a lot of due diligence upfront, making sure that, I'm not caught with something like this where, you buy something without realizing, right? So, yeah.
Yeah. Okay. Where can you get your book?
The book is being released tomorrow. It's sitting on our website, helpmebuy.com.au. It's also would be launched on Amazon. So, do jump in there. It's called The Millennial's Guide of Property Investing. And a lot of blood and sweat went in there in writing that book. So
if he's made all the mistakes, maybe you can go and the smartest investors I know, they capitalize on other people's mistakes and or scar tissue so they can make 100%. More informed decisions. And you said you got a podcast. What's it called?
The podcast is called Help Me Buy Property Podcast.
There you go. We'll go and track that down. I'm sure you can find that in any of the different podcast players. Moxin, thanks for your time today, mate. Really enjoyed chatting with you.
Thank you very much, Phil. Thank you for having me here today.
And where can people track you down? What's your Facebook group called?
You can track me at Moxin Reza. So that's my handle. Or you can find me on YouTube as well with Moxin Reza. So it's Moxin with an X, MOXINREZA.
Okay, there you got it. It's Moxin Reza. He's the founder and CEO of an investor partner group. No doubt we'll have a chat with Moxin in the future. I hope you enjoyed that, everyone. Remember, check out smartpropertyinvestment.com.au. Social media, just look up Smart Property Investment. You'll track us down, Instagram, Facebook, TikTok. We're all over the joint these days. You're probably getting sort of feeds from these podcasts as well. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.